Welcome to the first episode of So Let's Talk series. If you recall, we used to do the Thursday Night Live with Mr. Money TV. But recently, we have decided to stop that series and we have told the audience that we want to change the format of how we interact with you guys. So as a result of that, this particular series is one of the things that we are going to do where I'm going to talk about some market insights, interesting news about the market in a very raw and unfiltered kind of format. So this whole thing is unscripted. It's purely my opinion. So hope you guys enjoy the show. And before we start, I just want to share that apart from this new series, on FAQ side, we are also starting a new initiative. And the thing is, I'm going to do more engagement with the community, with you guys. And on the 29th of March, I'm going to have my very first community event where I hope to meet up with you guys. Thank you so much for supporting FAQ Show all this while. And we would like to get to know you guys better. So hope to see you guys on the 29th of March. At KL Eco City, 10 o'clock in the morning, where I'm going to talk about how to win in trading with a 9-to-5 job. And for this event, I would like to take some time to say a big thank you to our last minute partner on this community event as well. So Mumu has decided to collaborate with us to make this community event happen. And in this collaboration, we are going to give away some free shares to you guys. So how it works is that from the 7th of March all the way until 28th of March, one day before the community event, if you open a new Mumu trading account during this period of time, you stand a chance to win a 0.5 NVIDIA shares. It's going to be a lucky draw and the lucky winner will win these 0.5 NVIDIA shares. This is open to public, so if you haven't opened a Mumu account, go sign up Mumu account. And more interestingly, if you open an account during this period of time and you attend the community event, you also stand a chance to win one full Apple share, also by doing lucky draw lah. So this is an exciting offer to all our audience out there. So hope to see you guys in the community event. But if you can't make it, don't worry, you still get a chance to win 0.5 NVIDIA shares. Okay, without wasting any more time, let's drill down to our very first topic in our first episode. And today, I'm going to talk about something very exciting. Now, I know that Malaysia IPO market has been really thriving in the past 2 years, especially right after the pandemic. Every year you're talking about 40, 50, and this year probably we're talking about 60 IPOs coming to the Malaysian market. But that's just domestically what's happening over here. Looking at the broader picture, there's this even more interesting IPO in my opinion. And while this IPO is in Hong Kong, but the brand is no stranger to us. I think most of us have already tried their product before. And just to throw you a hint, so these guys, they sell very, very cheap ice cream and also they sell bubble teas and that kind of stuff, right? It has a snowman mascot and all that. So I think without further description, you already know what am I talking about. And yes, I'm talking about the recent Mixue IPO that happened in Hong Kong. So this IPO has caught the world's attention, but before I go into the details on the IPO, perhaps we should talk about a little bit about the background of the company. So you guys get some context of where this Mixue come about, why it suddenly pop up, and then once it pop up in Malaysia, it's not 1-2 stores. Today they have, if I'm not mistaken, about 300 stores in Malaysia and still expanding, right? So what's the story behind? So Mixue started off on this street in Zhengzhou by this young chap called Zhang Hongchao. Back in 1997, he borrowed 3,000 yuan from his grandmother. 3,000 yuan is about, I think, close to 2,000 ringgit. Then you could be thinking for yourself, right? What can a 2,000 ringgit do by opening a store, right? So this guy is very smart. The store is not just on an ordinary street. It's on a street that is close to a school. So he knows that by doing that, you will draw a lot of traffic from students. Before you go to school or after school, you're on the way home, you will have to definitely pass this road. And so what would be the thing that will interest all these students to buy things from a store along the street? Then during summertime, it's very hot and all that. So a good cup of drinks or some ice cream will make a lot of sense for all these students. But he also understands that students have very limited purchasing power. They have to rely on their parents for pocket money allowance, in order to do some shopping, right? So he knows that if he wants to open a shop on a street near a school, the product that he sells has to be affordable to these students. And given the weather condition and whatnot, so he decided to open an ice cream store, right? He sells cheap ice cream to the student and some drinks as well. And to his surprise, it was a hit on that street. He make a lot of money, people like his stuff, simply because of the price point, right? This price point, which has become the unique selling point of Mixue even until today. Right, so he was doing that from 1997 all the way to 2006. And then on 2007, his younger brother decided to join him to expand the business. So his brother probably have some experience working in a larger organization, who knows how to operate business operation on a large scale. So when he joined his elder brother Mixue to run the business, he was bringing all the expertise and experience about store operation, and he also helped him to establish a standardized operational management system. And once the business is able to run more systematically, then he even helped his elder brother to think about how to franchise the business so that the business can really scale. And then with the help of the brother, from 2007 all the way until June 2020, Mixue brand managed to open 10,000 outlets across China. What's fascinating here is that the time frame here we're talking about is just 13 years. In 13 years, these two young chaps is able to scale the business from one street store to 10,000 outlets. I don't think many businesses today in the market is able to achieve that kind of numbers, right? But if you think that is very impressive, let me just throw more numbers to you. By February 2024, the chain had about 36,000 stores across the world. And you're talking about the pandemic during this period of time, right? So during the pandemic, all the businesses didn't run very well. Everybody was stuck at home. But these guys, they were able to expand the stores from 10,000 to 36,000 during this period of time. And again, if you think this is impressive, right? From February 2024 to September 2024, about slightly more than half a year, it grew again from 36,000 stores to 45,300 stores. So you may be wondering, how did they even do that, right? I think it comes from a few... So I think this growth comes from a few places. Number one, you're talking about China. China is a very big market. So it is quite easy to scale in that market. And given that their business model is to sell cheap drinks, affordable ice cream and things like that. And today, even though China is a very developed country, but all these development are still very clustered at the tier 1 cities. You still have the tier 2, tier 3 cities where people are still looking for cheaper stuff because the standard of living over there is not as high as the tier 1 city. So there are a lot of opportunities to Mixue to enter and capture this market. So domestic market is one market for them to scale. And on the other hand, they were also starting to do the franchise model, remember? And this franchise model, they were targeting overseas market. And that's the reason after pandemic, you'll notice there are more and more Mixue outlets popping up in Malaysia. And I suppose if you travel around the region today, it's not hard to find a Mixue store near you as well. So those are the things that you can see that these brothers have been doing. Now, the things that you cannot see, but is happening behind the scene, also help the business to grow during this period of time. So they were developing its own trading, its food production, logistic arm, and eventually allowing it to self-produce and self-source 60% of the ingredients supplied to its franchisees. So meaning to say, if you go to a Mixue store today and you buy any of their drinks, most likely 60% of what you're holding in your hand comes from China. This is quite impressive in the sense that if you look at other franchise model, especially those international one, what they tend to do is that once they open up new franchise in an international market, very quickly they would want to also open, let's say, a central kitchen and then all the supplies will come from that central kitchen to service the stores around the area. But for Mixue, 60% of the ingredient is still supplied from the main factory itself, which is in China today. And for the core products, the ingredients could be 100% sourced from the China market itself. So that's the fascinating thing that these two brothers did. But the things that they did also came with some challenges, right? Now, just now I mentioned most of the time when people talk about a franchise model, they want to set up like a few central kitchens to service the outlets nearby. This is for efficiency, better logistic plannings, yada yada, stuff like that. Perhaps they want to control their quality better. So Mixue decided that, so all these core products, from the cup all the way to the straws and stuff like that, and all the recipes should all still come from China itself in order to control the quality and not having to manage too many central kitchens at one point. But this means Mixue will face a different kind of challenge, the challenge of logistics. Give you a very simple reason. If you guys recall, at one point in time, we were having a supply chain disruption, right? This supply chain came from the pandemic, because during pandemic, not many business is able to run normally. So a lot of things were stuck. So goods from factory cannot move to warehouses, from warehouses cannot be sold to the customers, and all that kind of challenges. Now, once the market reopened, what we saw was a pent-up demand for goods and services. People were just shopping, buying things and stuff like that. And all these businesses find very difficult to cope, and they have to order very quickly from the factory and say, hey, quickly send me the goods because my customer is waiting, right? So all these shipping companies were also very busy, and they have very limited space to carry all these goods to the end customer. So freight cost was very expensive during this period of time. And this is the kind of challenge that Mixue faced, because 60% or up to 100% of the products comes from China to the rest of the world. When you have a supply chain disruption like this, things cannot move, everything just stuck in China and cannot come out. And don't forget, Mixue was doing aggressive expansion during this period of time. So on one hand, we have more stores to service. On the other hand, your goods cannot go out from China because you have very, very few ships that are able to ship the stuff and ingredient to all these stores. So they had some glitches in terms of business operation. So to counter this, I think Mixue had learned their lesson, and they are starting to adopt what a typical franchise model would be, setting up more central kitchens nearer to the international markets. And to do that, they have identified some strategic partners in order to help them to run those operations. So I think today the situation is not as bad as before. Now, the other challenge that Mixue could be facing is that, I'm not sure if you notice, right? Sometimes if you walk around a neighborhood, you'll find at least one or two Mixue around the same vicinity of area. Then a lot of people were saying that this could cannibalize the stores, because if you have two stores open, then they will fight for sales among each other. Some people see this as a risk, but in my opinion, I think this is a very interesting thing to see in business. Now, why do I say that? In the past, when I was still in investment banking, the way that we would talk about Berjaya Food or Starbucks Malaysia for that matter, right, is that, do you notice a lot of these F&B chains, they are not like Starbucks where you can open one store at the beginning of the street and you open one at the end of the same street, and both also make money. It's very hard to see businesses like that. So very often, a typical business would just open one key store in one area, and then the next expansion would happen at another place, so that these two stores don't fight for the same sales. But Starbucks was one of the very few businesses who are able to do that. And now I think we are seeing this again on Mixue. So some people may see that this is a risk, where you are cannibalizing sales if you open two stores nearer to each other. But perhaps they are the next Starbucks, right? Where they can open two stores in the same area and both stores can make money. And I think it can, because now the problem with Mixue is that because their ice cream and their drinks are so affordable, the queues could be very long if you are just having one store. Now, having two stores now, then you can spread out the crowd, both stores can still make money, and I think that is the strategy that they are adopting in international markets. Yo guys, want to level up your financial game? Check out Mr. Money TV to get smarter with money and get yourself up to date with current issues. So we all know Mixue business is very good. You often see long queues in front of the stores. Price is affordable, so people don't mind buying sometimes 2 drinks. One for the morning, one for the afternoon. But do you know that most of the revenue didn't come from selling beverages or ice cream to the customers? This is something very interesting in their business model. So according to their prospectus, 97.6% of the revenue for the first 9 months of 2024 comes from the sales of ingredient and equipment. What this means is that before the customer even goes to a Mixue store to buy a cone of ice cream or a cup of beverage, the Mixue holding company would already earn from the store itself because the store needs to buy the ingredients, the supply and whatnot from the parent company. So this is where Mixue makes money. They sell all these supplies to the stores and they have to buy it from the parent company in order to ensure the quality is consistent, the branding is consistent, and the product is the same wherever which store you go. So 97.6% of revenue comes from this. So if you think about it, they don't really need to sell beverages of ice cream to make money. All they need to do is to be more aggressive on new store opening. Maybe from 45,000, let's double it to 90,000. And that could help the company to double up the revenue and the profitability in the next couple of years. According to the internet, if you want to open a Mixue store in Malaysia, the franchise fee is about 300,000 ringgit. And then 1/3 of that money goes to that stocking of equipment, the ingredient and stuff like that lah. Apart from that, the Mixue holding company will also provide some value-add services. So they help you to pick a good store location where they think that your sales will do very well. They will also give you free marketing material, right? They give you free designs and stuff like that. So the point here is they are not just here to squeeze every outlets and earning money from them by selling all the equipments and ingredients to them. They also help those small little stores, their franchisees, to make money because they know that if the franchisees can make money, that's where they can continue to buy the supplies from the parent company, and this business model can become more sustainable. So after paying this 300,000, you are pretty much set to open your own Mixue store. Then now you could be thinking, right? For every drink or every ice cream that I sell, probably I will have to pay a royalty to the parent company. I mean, that's how a typical franchise model works. But for Mixue, from what I know, and if I'm not wrong, there is 0 royalty fee involved. So whatever you sell, you get to pocket the money. Compared to T-Life, again, if I'm not mistaken, correct me if I'm wrong, they would collect a 3% royalty fee on the sales that you make. So before even you can see the money, for every T-Life drink that you buy, 3% of it will already go back to the T-Life parent company, and you're only left with 97 to deal with the rent of the store, to buy more supplies, hire staff and whatnot. So this is a very interesting model, right? Not just on the parent company perspective, but at the store level because you get to keep 100% of the sales. Okay, coming back to the IPO. So when Mixue went on listing on the Hong Kong Stock Exchange, they were looking to raise $444 million in exchange for 17 million shares. These are just big numbers. There's very little meaning if we don't get a context of what is this 444 million. When a seasoned investor look at an IPO issue, very often they pay a lot of attention on the shareholding structure. And what do I mean? So let's take Mixue as an example, right? So $444 million. How many percentage of this amount of money is taken up by institutional investors? How many percent of it is held by the original shareholders? And how much of it is sold to retail shareholders like you and me? Why this is important is because the dynamics and the behavior of these 3 categories of investors are very different. For the original shareholders, the owners, it's very unlikely for them to sell the shares in the market because if they do, they're going to lose control in the company. So let's safe to say that whatever holdings that they have post-IPO, that amount of shareholding, that percentage will stay the same for a very long period of time. So no question about that. The second group of people, institutional investors, the people like the fund managers, asset managers, and whatnot. These people are very often strategic investors. They invest in the IPO for the long-term prospects of the company. Therefore, if they are convinced that Mixue is going to do well, let's say 5 years, 10 years down the road, so if the progress is following the story as laid out in the prospectus, these institutional fund managers, they will just hold on to it. They will not sell, therefore giving some stability to the share price. Now, the retail investors is the exciting one. It's their money. They don't need to answer to anyone about what they want to do with the money. So if they think the price is right, they will just buy. If they think the price is too expensive, they're going to sell the shares. This group of people is the one that is going to create the volatility in a stock. Therefore, by understanding the shareholding structure of an IPO, you can roughly know how this stock is going to behave once the stock comes to the market. Now, let's look at Mixue's shareholding structure. So very interestingly, they have quite a good blend of these three categories of investors, which I think can give a very good stability to the share price over the long term, right? Now, they managed to garner 5 cornerstone investors. And these 5 cornerstone investors are big funds in the market. You have a British asset manager, M&G Investment, Hongshan Capital's Growth Fund. You have a unit of Boyu Capital called Persistence Growth, a Hill House Group Fund, and Meituan's Long Z Fund. And these 5 cornerstones hold about 45% of the shares that Mixue offered for the IPO. 45%, meaning to say, very likely this 45% of the outstanding shares is not going to appear in the market and create that volatility. It's going to be held long term. All right, then once Mixue got that money, what are they going to do with it? Because ultimately it's our money, right? Our investors' money. So a big chunk of it will go into production capacity expansion. This is to better meet growing demand of their products, especially since the firm is also, and not just that, they also deliberately want to create somewhat of a production capacity redundancy. That means they are going to expand their capacity more than the demand, so that in the future, if the demand picks up even further, they have the extra capacity to expand, and they don't need to worry about, oh, now I need to buy a new factory, then it takes 2 years to build, then 2 years later only my production can improve further. Don't need. They're going to build that redundancy so that they can grow at an instance. Apart from that, they will also spend some money on IP building and marketing. I think this is very important because not just in China, but international market as well, you are not talking about just 1 or 2 ice cream players or 1 or 2 beverage players in the market. It's a very, very fragmented and very low barrier to entry kind of business. So one way to ensure sustainability of the business, they need to invest money in branding. They need to tell people that Mixue is the place that you want to buy your ice cream. Mixue is the place that you want to buy your drinks, so that consumers will keep coming back and not think about other brands when they think about ice cream or beverages. And then doing a business in 21st century, you cannot run away from technology, right? So part of the proceeds from the IPO will also go into digitizations of the business operation. I suppose this is to help them to become more efficient when it comes to supply chain planning and that kind of stuff. And by doing that, they are able to reduce their costs. So hopefully the profit margin can improve if they invest in the right technology now. So now, it comes to the valuation of the share price today. Since IPO, I think the share price has done relatively well. So the question that people always ask is it too expensive to buy now? Now, there are a few ways to look at this, right? If you are a number-driven person, then of course you will go and look into their profit, take the profit, you measure against the market cap, find out what is the PE ratio of the company, and then you will say that, at this level, I think it's very expensive. At this level, I think it is still affordable, right? But all these numbers means nothing if there is no benchmark in the market. And this benchmark is very subjective, right? Let's say, in my opinion, a fast food chain like Mixue should be valued at, let's plug a number from the sky, is worth 20 times PE. And if anything more than 20 times PE means that this stock is expensive. But that's just my opinion. Other people would think that, hey, but for a brand like Mixue, which is expanding so quickly, they deserve a premium. Maybe 30 times PE, I think is affordable. And when different people have different benchmark, it's very hard to tell then where is the fair price. So yes, for me, I usually leave that calculation to the professional fund managers because ultimately they hold the largest chunk of the money, and whatever benchmark that they use is the benchmark. And since I have no access to them, I don't know what's the benchmark, so I don't want to play that game. Then what do I do? Now, what I can see is the real business operation on the ground. In Malaysia itself, many Mixue outlets are making money. You can see long queues, the business is doing well, and new stores are popping up. And remember, more than 97% of the revenue comes from supplying all this stuff to the store and not even people going to buy, right? So by opening up new stores, it's very safe to assume that the parent company is going to make money. That's one. And number two, by understanding the business model of Mixue, you can be very certain about how the company is going to make money. Like I mentioned just now, I just need to know how many new stores this company is going to open because that will determine how much revenue Mixue is going to make. And as long as this number is a growing number, and if the growth makes sense to me, then I tie it back to the share price and say, hey, I know the price has gone up, let's say 10%, 20%, or even 50%, but because they are able to grow at this pace, and because the business is still coming in, and it is good, I think I want to pay this price to hold this stock for a certain period of time. I think that approach will be more reasonable to retail investors like us. And it is very easy to analyze because all these things are around us. Mixue is all around us today. All we need to do is just to be a little bit more aware of things happening around us and have a little bit more of that critical thinking skills to help us to come to a conclusion whether the business is a good business or is it a hype or I think it is a business going sunset. Now, if you ask me what I think about the Mixue share price, will it go up or will it go down? I am slightly more positive bias, but I have my reserve. And let me share my reserve. My reserve comes from the fact that I don't really like a restaurant business going IPO. Because if you think about it, the core asset of a restaurant is the chef. And if the chef leaves, basically the sustainability of the restaurant or the outlet is very questionable. As such, people are trying to institutionalize restaurant operations. That's why you see all these franchise model. You have central kitchen. Everyone is trying to copy McDonald's where all the food in every McDonald's chain tastes the same. So yeah, fair enough, right? But that would take away the essence of a restaurant. Then why do I want to go to a restaurant if everything tastes the same? Therefore, it is very difficult to assign a premium value to a restaurant operator or a fast food operator in that sense. Now, then why am I positive bias on Mixue is because of the difference in the business model itself, right? So these guys, they are not relying on the chef because it is just an ice cream or a beverage store. And number two, the business model doesn't rely on people buying their products. It relies on the store. It relies on opening new stores, and all these new stores need to get their supply from the parent company. And all they have to do is to provide some support to ensure that all the partners in the franchisees make money selling drinks to their customer. The business will just continue to go on. So long-term sustainability of the business, I have my reserve. I'm a little bit concerned over here because all it takes is for another Mixue to pop up somewhere where they can sell cheaper ice cream, right? And then, yeah, you immediately have a head-on competition. But the good side of it is that I think this business model is going to help them to make a lot of money, at least for the foreseeable future. So at whatever level that you feel comfortable about it, that is the price that you can invest in this stock. So to wrap things up, I just want to throw this question to you guys. Today, with all these new brokers in town and all that, it's very easy for us to invest in Hong Kong stocks, US stocks, overseas stocks in general. So have you started invest overseas, or are you still investing in just domestic stocks only? Now, if you're looking to explore into Hong Kong market or US market, don't forget to open a Momo account. Use our code MMTV40. Especially if you sign up an account from the 7th of March all the way to 28th of March, you stand a chance to win 0.5 NVIDIA through a lucky draw. And if you attend our community event on the 29th of March, you even stand a chance to win 1 full Apple share from Momo. So whatever we've discussed just now is not financial advice. I'm just sharing my opinion and to engage more with you guys as a community. So I hope you guys learned something or two today. And if you like this episode or if you like this format, tell us in the comments as well, so that we know that we can do more of such content and continue to have discussion together through this channel. So hope to see you guys in our next episode of So Let's Talk. See you in the next video.